is a great news for passive income investors. Yesterday, Roundhill introduced brand new ETFs and going to pay weekly distributions. Introducing Weekly Pay ETF, powerful combination of income and leverage. We are pleased to announce the launch of our first 5 Weekly Pay ETFs listed below. These are ETFs that Roundhill has just announced. The first one is going to be Roundhill Nvidia Weekly Pay ETF. The ticker symbol is NVW. This is Nvidia. The second one is Roundhill Tesla Weekly Pay, which is TSW. Roundhill Apple Weekly Pay, AAPW. Roundhill Coin Weekly. The ticker symbol is COIW. And the fifth is Roundhill Palantir Weekly Pay. The ticker symbol is going to be PLTW. So this is very great news for passive income investors and investors who are looking for weekly distributions. But it's not going to be a good news for YieldMax ETFs because now they're getting a direct competitor in most of their ETFs. Roundhill didn't have this type of ETFs, but now they come up with these. I can see a lot of people actually moving their portfolio from YieldMax coming to Roundhill. Let's go a little bit deeper so we can understand what these ETFs actually are. Weekly Pay ETFs. The Roundhill Weekly Pay ETF Suite is an innovative fund series designed for investors seeking weekly income and amplify exposure to single stock. These first of their kind ETF aim to provide weekly distributions and enhanced returns equal to 100% of a given single stock calendar week price return before fees and expenses. I'm going to give you more details about this 100% return. The main 3 reasons why you should consider investing and buying these ETFs are: the first one will be weekly distributions. A Weekly Pay ETF pay distributions every week, offering a recurring income stream for shareholders. Reason number 2, enhanced exposure. Weekly Pay ETF seeks to amplify returns by targeting 120 of their reference stock weekly performance. The reason number 3, powerful combination. Weekly Pay ETF provide a potentially powerful combination of a single stock leverage and a weekly income. Remember, they use a lot of word leverage here, and that's what this 120 is. But I'm going to read on one of these ETFs so you can understand more about the 120. These are 5 ETFs with their symbol. This is Nvidia, this is Tesla, Apple, Coinbase, and Palantir. To understand more about this ETF, let's dig deeper. The first ETF we're going to look here is NVW, Nvidia Weekly Pay. NVW seeks to pay weekly distribution to shareholders while targeting enhanced return corresponding to 120 of Nvidia weekly performance. I'm going to explain this. Overview: the Roundhill NVDY Weekly Pay is designed for investors seeking a combination of income and growth potential. NVW aims to provide weekly distribution and calendar week returns before fees and expenses equal to 1.2 times the calendar week total return of Nvidia stock. NVW is an actively managed ETF. There is no guarantee that the fund will successfully provide returns that corresponds to approximately 1.2 times or 120% the calendar week total return of common shares of Nvidia. An investment in the fund is not an investment in the underlying stock. The 1.2 here, all what they're going to do is a swap type structure. So it's pretty much a lot of leverage. An investment in the fund is not an investment in the underlying stock because they are now going to invest 100% in Nvidia stock. So this is not going to be an ETF that actually tracks Nvidia, rather a swap structure where they're going to do leverage. And I'm going to show you top holding. The main reasons why you should buy the Nvidia stock itself are the same reason I already read it to you earlier, and that was weekly distributions, enhanced exposure, and powerful combination. Fund details: the ticker symbol is NVW, and expense ratio, you're going to pay 0.99. The launch was on February 19, 2025. Management style is active. Share outstanding is 10,000. Top holding: Nvidia Corp Weekly Pay Swap. The weight is 99, almost 100%. If you look here, 19.96% is Nvidia Corp. This strategy can be really great for generating income, but Also, it might be a bit risky because they're not using a cover call strategy as other ETFs. Performance, of course, this is a brand new, so there's not much of the performance, but the price is about $50. The first distribution is going to be on March 4th, 2025. If you want to receive this distribution from this ETF, make sure you buy any of these ETFs before that date. This information on Nvidia, this will apply to all of them. All of them would have the same structure, the same leverage, the same reason why you should buy, the same expense ratio, would have the same structure of holding, which they're going to have 100% of it is just leverage or swapped, and then only 20% is going to be invested. And the distribution announcement is on February 28th. Ex-dividend date is March 3rd, record date is March 3rd, and payday is on March 4th. That will apply to all 5 ETFs, so you can pick whichever ETF you like to invest in, whether it's Palantir, whether it's Tesla. Those are the dates and that's information. The last thing we're going to look is a performance of this ETF within these trading days have been out. NVW, which is Nvidia, the price of today is 50.26. And this is the movement has been at one point, it dropped to $44. Volume right now is only 10,000. The second ETF we're going to look is Tesla TSW. The price is at $50, and that's the price it came out, about 50. And then it went up all the way to 52, but it retraced back to where it is right now at 50. So it's pretty much a little bit below where it started, around $51. The second ETF we're going to look is Roundhill Apple. Apple, it seems it has very low volume. It's only like a 2,000, but that price right now is a 50. At one point it dropped to 47. This is a coin, and coin has a lot of correlation with crypto, and that's why this is even more volatile. The price right now is only 48. It's at 50, 20-ish. Average volume 10,000. The last ETF we're going to look is Palantir PLTW. This one started at 44 and right now is at 42. Palantir is one of the most volatile stock these days. Check out the volume. It's a 48,000. So this outshine all of the ETFs that we've mentioned before. So if you want to make a lot of money and you want to have exposure to this weekly distribution apart from YieldMax ETFs, these 5 ETFs I just mentioned will be the ETF you should be looking at. Do your own research before you invest in these 5 ETF or weekly paying ETF from Roundhill. I just made this video to keep you up to speed with the brand new ETFs from Roundhill. If you like this content, please smash that like button. And if you don't want to miss this type of update, make sure you subscribe and hit the bell button so you don't miss any type of updates for your passive income journey. Thank you very much for watching. I'll catch you on the next one that's coming soon. Bye-bye.